Yo, what's up you guys? Welcome back to a new weekly market breakdown where we basically take a look at the market from both a technical and a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a weekly basis. And if you do enjoy the content, please do consider smashing that thumbs up button for the YouTube algorithm. In that way, I'll be helping you and you'll be helping YouTube recommend this video to more people so that we can get more people educated out there. Now, what we are going to take a look at is obviously going to be quite of a week for the index this week. But we are firstly going to take a look at last week and then obviously work our way gradually through this week. Obviously focusing on the dollar index, and then from there we can obviously make correlation decisions based off what the outlook is for the dollar index from a fundamental as well as a technical perspective. Now, the first thing that we need to note is last week was the last week of the month, and we obviously had the consumer confidence. If you don't know what the consumer confidence is, it's basically you as a consumer and your confidence in the market. Now, a higher reading is obviously that people are more confident that the economy will recover. We obviously know that the Feds still has a long way to go to meet their interest rate target there as well. Powell came through twice this week and he delivered a speech. And then obviously we had the final GDP, which is basically quarter over quarter. That's what the Q over Q means. And then we had the unemployment claims, which can be seen as UIF claims. It's people that lost their jobs that had filed for a paycheck or a unemployment paycheck. And then we had the core PCE, which is the core price index, which was measured month over month, which also came through positive for the index. Now, we also had, coming through on Monday, we got the PMI, the Purchasing Managers Index. We got OPEC, and we also got the FOMC meeting minutes. We also got ADP, which is an automated data processing for non-farm employment change, which is basically a survey that is conducted, and they use that information to also detect or to work out the people that was loaded onto the payroll in the non-farming sector. We got some unemployment claims. This is again people that had filed for unemployment. We've got the ISM services, which is the purchasing managers. The ISM services PMI. We also got the JOLTS job openings, which is also a survey conducted, and we got the average hourly earnings, the NFP. Also got the unemployment rate. Now, the unemployment data for last month was obviously a shock, as we obviously the market had come through higher than anticipated. So nobody expected the market to pull through like it did last week. So obviously coming through, with the previous month, we saw, we were 3.4 up to 3.7 there as well. Now, one thing to keep in mind is the main news event that we are going to focus on this week is going to be the unemployment rate data. Now, I know a lot of people, they look at the NFP as a whole, and they obviously look at new jobs being added. But one thing that you need to understand, even if the dollar, even if they do add more jobs, if the unemployment is not moving lower, then they're not making any progress. So the key thing that we do want to see with the unemployment data is potentially, we can see here the Dow Jones forecast is sitting at 3.6, which is lower than the previous month's data. If that comes through positive, then that obviously is good for the index for the short term. But then obviously the rate decision or the fact that the Feds might hike interest rate will be a lot less. And if the if the unemployment is higher, then there is a higher chance that the Fed could potentially continue with that rate hikes there as well. Now, before we get to the articles, I just want to go through some of the questions that we have received over here. The first one is from LXN3 WX3 is asking, can you tell me what fundamentals do you need when, so you basically want to focus on euro, so any euro news, and the way you do that, basically you go to Forex Factory, and the same way I look at the DXY news. So you basically want to come through on the filter bar, you want to go to euro there, and you basically want to focus on everything that's euro related. So euro rate decisions, any news that is related to the euro will impact the DAX or the GER30. Next question here. I wanted to find out about your signal services. I do not offer those services. Hey, thanks. Okay, cool. what is certain kinds of services. So just to give you guys an idea, the reason why I do not offer any of these services any longer, it's because I've put everything out there on YouTube for you guys to learn. So it will be pointless for me to to start a mentorship, or to do to look at this whole thing with signals. I mean, in terms of information, everything is on YouTube. I've done videos of everything that I know, and I've basically give it to you guys. So there's no reason why you need to still go out there and pay for any person's services, especially if they're gonna charge you $650 for a course. Then it's pointless. You have all the information that you need is available right here on my YouTube channel. Okay, that's it. So that's the only two questions that we have. So the first article comes from CNBC, and this is basically giving us an indication on how we closed off the last week. That says here the S&P was on the rise on Friday to close out big first half. The Nasdaq posts best start to a year in 4 decades. Well done. But that's obviously because as the dollar index started to decrease since last year when the Feds announced when the Feds announced that they're going to not be as aggressive with the interest rate hike this season, we obviously saw the dollar index starting to lose value, because higher interest rates normally attract investors, and a pause in interest rate or a lower interest rate tend to be a negative, because currencies are normally strengthened through a strong economy and a lot of investors. So because of the weaker index, we obviously now see the stock market basically going back to where it was the last time. It says your stocks were up on Friday. Technology names continued their staggering run to cap off a strong start to the year and the best half for the Nasdaq since 1983. It reminds me of when inflation was so high, and they said the inflation has never been as high as it is now compared to what it was a couple of years ago. So we basically got some news here telling us what the percentage gains was for the Dow Jones, the Nasdaq, and the S&P 500. Also what individual stocks were and where they were performing at. Here we got Nike. So if you are interested in digging a little bit deeper to understand what the reason for the bullish momentum on the stock markets was, you're more than happy to go over this article and read it at your own time. And the gold also negatively correlated precious metal with the index. As the price of the dollar index increases in value, the price of gold tends to decreases in value, and vice versa, because gold is priced in dollars there as well. Now, it says your gold was bound for its first quarterly decline in 3, squeezed by expectations for more interest rate hikes. What that says is that gold was bearish on Friday. That's basically because they now anticipate the Feds are more likely to increase their interest rates, purely based on the fact that firstly we had a lower we had that negative reports for the NFP that came through last week. The interest rate, the unemployment went up. It says here spot gold was up 0.5%. Prices have said 2.5% this quarter, dropping from levels just off all-time high at a $2,072 in May, caused by nervousness about the health of the U.S. banking sector to below 1,900. Now, if you've not been living under a rock, you obviously know that there was this whole story with the banking, with the U.S. banks and all of that stuff. The debt ceiling came through, kind of confused the whole market at the end of the day also. Now, we're going to take a look at the market, obviously from a technical perspective. Now, it's very important to keep in mind that the NFP is probably one of the most important news factors to look out for. So what we can see basically here on the dollar index is the market is basically sitting at a very important structural level. The market had broken above this level of resistance, came back, tested it as support. What the market had done also is the market had printed a massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, you can see the market had hit a very important important level over here, which is the 61.8. Apart from that, the market is also testing previous structure. Now, we obviously, based off a technical perspective, we do expect the market to continue higher from where it is now. I obviously anticipated the market to continue slightly higher, and this is exactly where I expect the market to go to next. But it's obviously going to take for the whole part of next week for us to get there, especially when the market is basically waiting for that NFP data to come through. And as most of you know by now, when the market waits for high impact news to come through, there's normally a time of uncertainty where the market basically consolidates and wait for the data to be released as well. Next up, we've got gold, which is a precious metal that is negatively correlated with the index. Now, gold had broken above the strong level of support and that became resistance. Market broke above resistance. Now we can basically see the market basically tested that previous level of resistance there once again. Now, because we anticipate a stronger dollar and because of the negative correlation between the index and the precious metal, we obviously expect gold going into next week to pull back from this level. From there, we can obviously once again monitor the price from there and then start looking for the next opportunity. Alternatively, gold might spike slightly higher before doing this pullback. In doing so, will the market print an inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective, which in essence will then have us starting to shift our momentum, our outlook for the index. Now, what we have on the Nasdaq, right? So as I basically spoke about the Nasdaq the last time, the market basically came back. Obviously, we had a lot of retail traders in here. I spoke about this last week, and I said that the market is basically stuck within this weekly consolidation phase, and it's impossible to trade a market that is basically stuck. Now, this is how the smart money trades. Basically, what we have over here is, firstly, what we have here is a market that printed support, broke below support, giving you that indication that the support had turned resistance. I remember I had a position in the market in here as well, but then I closed it immediately because this is normally what they do is they give you support, break below that, you expect it to be resistance, and then start that continuation to the downside. But what the market did, it never came back to test this level over here. I am still bearish on the Nasdaq, and I know we are going into a new week. So I do expect the Nasdaq going into next week to pull back because once again the market is waiting for the jobs report to pull through before they obviously determine the next move. Next up, we do have the GER30 or the DXY index. Basically, also, if you look at the DXY, I was speaking about this market at this level, obviously explaining all of the reasons why I expected the market to continue higher. The market printed the support, broke below support. It never tested it as resistance, break above resistance. We obviously expect that continuation to the upside for the market to go and hit this previous level, this high in the market here as well. If you go down on the daily time frame, what do we have over here? Now, if you look slightly left, you can see the market had printed this level of resistance, broke above resistance, tested it as support did not hold, the market came back, tested it as resistance once again. I do anticipate the market to continue higher, and then we can obviously start looking for a pullback from this level. But for where we are now, I do expect us to continue higher first before any potential pullbacks for the market to complete this massive impulse leg, and then from there we can then start looking for a correction on there as well, guys. Next up, what we have over here is the Dow Jones. You can see Dow Jones has got similar price action to the Nasdaq. Now, I remember the last time we spoke about this, I obviously anticipated this move over here for the market to pull back at that level, but the market obviously moved slightly higher. What I would like to see is we have not reached the highs of this market yet. Now, going into next week, I do expect the market to potentially, there's a high potential that the market could potentially continue slightly higher first before we can see a pullback within this market. Now, what I am going to look out for is obviously for bearish price action in this market from there, and then obviously start looking for that pullback. But you obviously need to monitor the market on lower time frames and then wait for the market momentum. This is slightly bearish because, as you can see, we're all the way bullish over here as well. Guys, that is it from my side. And like I said before, all of the content that you need is available right here for you. If you go back onto the channel, you'll see I've made a lot of videos, Fibonacci, strategies that you can use and backtest in the market. There's no reason for any person to pay anyone for any mentor sub, especially if it's not going to include free indicators on TradingView. Guys, that is it from my side. I want to say thank you so much for your time, and as always, cheers for ears.